check, make sure we're hitting everything. Put my phone on mute. All right, Deborah. So let you know we'll be starting here in a minute.
Good evening, everyone. Can you hear me? My name is Tamika Sadler, and I am conducting the DC3 business class for the next 4 weeks. And we're going to get started. I'm happy to have you here. I've been in small and minority business for the past 20 years, and I have worked from the Minority Business Development Center to a private consulting firm, helping small minority businesses with insurance, bonding, business plans, and financial statements and loans. Any type of assistance to help them grow their business, I've been working with them. So this is, I think, my third or fourth time teaching this class, but my first time teaching almost all online. So I'm about to share my screen right now. So if you have any questions, I believe Shaniqua will run the chat. Right now, I am, if I don't see the chat, please, I think Shaniqua will send me a text, and then we can stop and answer any questions. Also, there's a breakout session at the end. So. So We went there. The first week we'll do basics of starting a business. The second week will be financial statements and loans. The third week would be marketing, sales, and HR. And the fourth week, we will discuss how to grow your business. Once you started the business, how are you going to grow it? So the first thing that you have to wonder or ask yourself is, why are you starting a business? Or did you see a market opportunity? We are just trying to come out of COVID, although we're still kind of in the end stages of it. Did you see a market opportunity that you could do, that you can make hand sanitizers or sell any type of PPP? Is this a hobby? Do you like to do renovations? Have you done the renovations in your relative's house, your parents' house, and then you've had friends ask you if you would come and help them out? Do you have a dream since you were a kid? Have you always thought about owning your own ice cream store, restaurant, or maybe even like a car lot? So another thing that you have to ask yourself is, when I start my business, will this be full time or part time? And then from there, you will, if it's full time, do you have enough cash flow for your personal expenses and your business expenses? So, let's say for the business, do you have, when you go and do your financial plan, your projections for your business, do you have enough? If you didn't make one dime, do you have enough to carry your expenses for 6 months? And then that's the business side. But also on the personal side, do you have enough to carry yourself for 6 months to a year? Or if you have a spouse, in the household income, are you okay with not bringing in any income for a whole 6 months to a year? So then the next thing, what type of business do you want to do? So it's important to know like the type of business that you want to do and how people bill for it. How are you going to get paid? If you're in the consulting business, let's say IT, business consulting, um, anything like that, you can charge per hour or flat fee. You need to decide, what is your fee? Are you charging $25 an hour? Charging $50 an hour? What is your fee? And with professional services, a lawyer, personal shopper, marketing, printing, accounting, do you charge by the hour, a flat fee, or per item? Like if you're a personal shopper, do you charge per item? How are you going to do that? And then I see a lot of people, sometimes they want to own a franchise. Well, the franchise, there is a fee associated with the franchise fee. Let's say maybe $100,000 just to buy the franchise name. And then once you start selling products, the corporation takes maybe 2% to 5%, whatever the corporation says, the franchise agreement says, that's what they take from your sales. So right off the bat, before you pay expenses, they take 2% or whatever they say in the franchise agreement from your sales. And it can be high, it can be low. If it's a janitorial, it's just usually a janitorial company, it's just usually a flat fee. If it's like Chick-fil-A or McDonald's, those are negotiated fees. Now, if you are going into construction or remodeling, who's going to be your estimator? Who's going to be your bidder? Do you have people? Can you do that, or do you have to pay someone to do that? And then with the storefront, the bakery, or a clothing store, are you going to do that? Sell cookies and donuts per item? Are you going to sell them in a box? What is, how are you going to make money? And then temp agencies, are you doing per assignment or a monthly fee? So the structure of the business really depends on you. And we tell people all the time, you talk to an attorney. That's your best bet of how you want to structure your business. But here are some steps on some advantages and disadvantages of structuring your business. And so the sole proprietorship is an unincorporated business with one owner, who pays personal income tax on profits from the business. So there's really no government regulation, and it's the simplest business form. So when you file your taxes, whether you file a 1040, you will have like a Schedule C and put it into your taxes. And so it just has the income and the expenses of your business, and that's all it is. There's really no additional forms. You may, if you have like a work truck or some type of if you have like a CD or something for the business, there may be like extra forms for that, but that's pretty much it. The advantage is that it's a business is easy to set up and low startup fees. And then later on, we'll get into how much that costs. And then only one person making business decisions. So it's not like a board of directors, it's not a partner or multiple people making decisions. It's just you. And it's an easy tax process that we just discussed with the Schedule C. The disadvantages of that is that the owner is responsible for all expenses and possible limited funding. So sometimes when you go for a bank a loan, they may look at all partners' credit, and someone may have a very high score, and someone may have a very low score, and so they kind of, make a decision based on the group. With the sole proprietor, it is just you. So if you have any hiccups or if you have any slow pays or charge offs or if there was a bankruptcy, then that may hinder you in receiving a business loan. But we can talk about that in week two because there are different types of business loans for people with limited credit history and that have had credit hiccups. And then also, the disadvantage is that, your business taxes are with your personal taxes. You can't separate that.
Excuse me, Tamika, real quick. Are your slides changing?
Yes.
Okay, yeah, we were on still stuck on slide 2.
Oh,
Yeah. So I can see them now that when you clicked on it, I can see you're on slide 5 now.
okay. So I'll just keep it like this.
All
Okay.
right.
Yeah. Okay. Thank you.
All right.
Okay. Let's see. Okay. If you have any questions about what I went over about the different types of businesses or why you're in the business, just let me know. So slide 6 is a partnership, and a partnership is two or more people in the business. And the advantages, of course, is a easy setup, low startup fees. More than one person has the responsibility for different aspects of the business. So with the sole proprietorship, you are responsible for estimating, you're responsible for collecting money, you're responsible for invoicing, you're responsible for actually doing the job. And so with the partnership, there are different people who could estimate, who could collect money, and then who could just run the back end of the business. That may be filing, that may be just developing business contacts, but there are different people to help you out. And then also, if there are business expenses, then you can split the business expense, whether it's 2 partners or 4 partners. Split that expense. And then, in theory, partnerships have more money to start up than sole proprietorships. But sometimes we know that everyone that's a partner doesn't come with cash, they may come with experience and expertise. So the disadvantage of that, of a partnership, would be you have to ask more than one person before you can make a business decision. So and then also the income splitting. So if you make a profit, you've done your work, and then you make a profit of $1,000. Well, the $1,000 just doesn't go to you. You have to split it 3 ways. After you pay all your expenses, your net profit is $1,000. You would have to split it 3 ways. And then also, if one partner does not perform, work falls on the other partner or remaining partners. So now that can get tricky because sometimes everyone always doesn't pull their weight. And then let's say that there's a 40% stake in the partnership, but the one partner may incur all of the debts if the other partner is unable to pay. And so that's something that you have to discuss when you're going into partnership with people. You also have to have a partnership agreement. And in the partnership agreement, it states who is responsible for everything. The and you should really get real technical about it, about the partnership, about who's responsible for marketing, who's responsible for new business development, who's responsible for invoicing, who is responsible for accounting, who's responsible for estimating, or even going to pick up. Let's say if you're going to pick up the clothes or picking up T-shirts, who's responsible for delivery? You have to be real specific about that because when you start in business and everything is you're going out getting jobs and prospects, you don't want to have any misunderstanding. You want to be able to go back to the partnership agreement and say, hey, this is what you're supposed to do. I need you to do it. Sometimes people go back and change your partnership agreement, but when you start out, make sure you have a partnership agreement. Also, on the business taxes, it's just a Schedule K, so that's in your personal taxes. So that's a disadvantage because all of that comes together. The next part is a C corp, and so the corporation, the advantages of a corporation, there is more of a startup cost because you have to register it with the state. You have to have bylaws. You have to also have any type of minutes. So you may incur a cost because you may have to go and talk to an attorney. And then sometimes there are different software online that allows you to start your corporation. But you have to be careful with that because what I found that sometimes the different software, like the LegalZoom, sometimes they don't send you all the documents you need. So if you do use LegalZoom to do your corporation, your C corp, your LLC, or your S corp, make sure that you get your articles of incorporation from them, and then if it's a LLC, you get your bylaws. And sometimes they just send you the certificate of formation, whatever the state sends them, and they don't send all the documents. And then when you are starting to go for a loan, or if you want to get some type of minority or small business certification, you have to go to the state and incur those fees again. So with an attorney, the attorney will send you all that information and they're going to charge more, but you'll have that information. But if you do use LegalZoom or the other type of online softwares, just make sure that before you close out your case with them, you have all of the documents, their certificate of formation, their articles of incorporation, bylaws, or any type of agreements. So, the advantages of a C corporation, shareholders are not liable for any debts incurred or judgments handed down against the corporation. And so, this is a good tool because let's say you have workers and they get into an accident, and there is, you do have insurance, but there's more. You have to pay more for any type of accident that happened, maybe medical bills, and that's more than the insurance that you have. They can't come back on you um, for your personal assets like your house, your bank accounts, or anything like that. The only damages they can get are from the company. So, and also sometimes everyone that's in the corporation doesn't have the same percentage. So if you are a shareholder in a company with only 15%, then you only are responsible for 15% of the any type of debt that incurs. So you always know what your limit is. You are not responsible for over 15% of anything, any settlement or for anything else. Um, a good thing, advantage of about the C corp is that you can raise additional funds by selling shares in your corporation. And so, you know, you may have, let's say, 100%, and you need to raise money. Well, you can decide how much money how many shares you want to sell, and how much you will sell each share. So you could sell a share for $100. You could sell a share for $1,000. It just depends on if anyone will buy it for that much. But you can raise money like that without going to go and obtain a loan or some type of payday loan or any type of loan from a bank or anything like that with a high interest rate. Um, so you may deduct the cost of benefits it provides to the employees and officers. So that is for like the tax portion. So if there are any type of benefits you provide, that is an expense that can decrease the amount of taxes that you owe. The disadvantages of forming a corporation requires more time and money than forming other business structures. And so we discussed that with the lawyer situation and the illegal Zoom. Governmental agencies monitor corporations, which may result in more paperwork. And so there are just certain forms that you have to fill out for the state to register your business. And then they will always check to see if the agent that you have that did all your paperwork is still the resident agent. You're also subject to higher overall taxes since the government taxes profits at the corporate level and again at the individual level. So we also suggest that you talk to your attorney and then you talk to an accountant about your tax situation. And if you can get a tax attorney, that's even better, but those are really expensive. But you can talk to either one about the different tax structures and how much it will charge you. There are a lot of people who have a C corporation and who don't pay a lot of taxes. So it's not like if you have a C corp, then you are going to automatically pay a lot of taxes. Now, if you make a lot of money, then you will need an accountant to look at your expenses and make sure you are doing everything you need to do to decrease your tax liability. So the next one is the LLC. With the LLC, they have members and provide their members protection from liability. The LLC is not personal liable for debts or other court judgments incurred by the LLC. Creditors are foreclosed from seeking the personal assets of LLC members. Um, and it's just not a shill because with a sole proprietorship and with the partnership, then they can come out of they can come after your personal assets. Um, you need an operating agreement, and that's one of the forms that the LegalZoom people need to give you, and then that your attorney will give you when you file the LLC with the state of Texas. One of the things with the LLC is that you have to turn in a form to the state to say how much money you made. And it's basically a franchise tax. That's the form that it's called. And so you have to turn that form in because if you don't turn it in, then the state will want to charge you. But you only are charged if you make over, I think it's $1 million. So most people turn in the form and say zero. They put in how much they made and it's zero tax. And it's just the state wants to keep track. And that's one of the things that's more paperwork when you start doing the C corp and the LLC. The advantages of the LLC is that it's a single member. As a single member, I'll say this: the structure is taxed like a sole proprietorship. Profits and losses from the business are not taxed directly, but instead are taxed through the single member's personal federal tax returns. And so, what that means is that they treat you like you're a sole proprietorship. And so, if you're a single member, and that means if you own 100% of the LLC, you will go and fill out simple taxes. I think you may have a Schedule C even in your personal tax returns. It's real simple, it's real easy. It doesn't cost a lot like a corporate taxes. Partners in an LLC, the members elect to treat like a traditional partnership for tax purposes. So if you own 51% or if you own 15%, that is what you will be taxed at, and not, the corporate rate. LLC files as a corporation. The members of the organization may also choose to file as if they were a corporation. You can only do that if you have more than one member. I've had a couple of clients that tried to file as a corporation, and the IRS sent it back to them. I don't know the correct definition of that, but they will send it back and treat you like a single member and tell you how to file your taxes. So the disadvantage of a LLC is self-employment taxes. And so unless you choose to be taxed like a corporation, LLCs are usually subject to self-employment taxes. And that means that the profits of the LLC won't be taxed at the corporate level, but will pass through to its members, who will account for the profits on their personal federal tax returns. And oftentimes these taxes are higher than they would be at the corporate level. And so the the disadvantage about that is that the self-employment tax, most people don't know what that tax rate is, but once your accountant starts doing it, or you put it into some type of income tax software, they tell you exactly what it is. And so there are a lot of advantages of the LLC. Most of the small businesses I know have the LLC, and they make money, but the self-employment tax does not really hurt them a whole lot, because they have a lot of expenses, verified expenses, that they can decrease their income tax rate. So um, a disadvantage is confusion about roles in there. If you have more than one person in one member in the LLC, people are confused. And so that's why with that operating agreement, it's kind of like a partnership agreement, because it sets the roles and responsibilities of everyone. And so when you start going for maybe a loan or maybe even minority certification, if that's the type of business you have, a small business certification, the certification agency will want to see the operating agreement to see who's responsible for what, to see if everyone has some type of viable role in this business. And so another disadvantage is, whereas corporations have specific roles like directors, managers, employees, LLCs generally do not. This can make it difficult for companies, and then especially investors, to know who's in charge. So some of this confusion can be avoided by creating an LLC operating agreement. And sometimes you need to update like that. You need to update the operating agreement like you do a partnership agreement, because people may decide that's not what I want to do anymore. Are there any questions? I don't see any. So I will go on to the next one. Oh, another disadvantage is that LLCs have limited life. If a member departs the LLC ceases to exist. And this is unlike a corporation whose identity is unaffected by the comings and goings of shareholders. Members of the LLCs can combat this weakness in the operating agreement. And I've seen that happen before. Someone decides they don't want to be in the business anymore, and there is a section in the operating agreement that discusses when members leave, what they will do. They get their investment back? How will they split the profit? And then if they have any type of equipment in the business, if that comes back, or the LLC pays them for the business. So if you do have the LLC, just make sure you talk to your attorney and get the operating agreement if you have members. But if you're a single member, it just doesn't, it's you and you have employees. So that's not a problem. The S Corp. The S Corp is a bit different, because not a lot of people have an S Corp. I will say that I have heard it is the best one. People, they swear by the S Corp, but I will say when people were getting the PPP loans, sometimes business owners do not pay themselves. And so when people with S corps did not pay themselves in the past, they did not qualify for the PPP. Um, the grant that the government gave out for businesses during COVID, they didn't qualify for it because they were looking at a certain item that says, well, how much do you pay yourself? And so with the S corp, some people, or even with corporations or LLC, people don't pay themselves. I will say that in a small business, you always have to pay yourself, whether it's like $1,000 a month or if you pay yourself $1,000 a week. Whatever you decide, pay yourself to have some type of paper trail that you are paying yourself, because during these last rounds of the stimulus for the businesses, people that had an S corp that did not pay themselves did not qualify for the PPP grant. So that was disappointing to some people because they needed the help as well. But an S corp is a corporation that is treated for federal tax purposes as a pass-through entity by the IRS. And so, what does that mean? An S corp is created through the filing of articles of incorporation with the Secretary of State, and the owners are called shareholders and have the same protection from liability as shareholders of a C corporation, of a C corp. And personal assets such as personal bank accounts cannot be seized to satisfy business liabilities. Um, but like I said before, people love an S corp. You just have to make sure that you are following all of the rules, and you don't have any issues with the IRS or the state that you live in right now. I guess the state of Texas, but it protects your assets from of the shareholders. And absent of an express personal guarantee, a shareholder is not personally responsible for business debts and liabilities of the corporation. Creditors cannot pursue the personal assets and like the house, the bank account of the shareholders to pay business debt. Um, So the like in a sole proprietorship or general partnership, owners and the business of the business are legally responsible. Um, leaving your personal assets vulnerable. The pass-through taxation, an S corp does not pay federal taxes at the corporate level in most states. Any business income or loss is passed through to the shareholders who reported on their personal income taxes. That means that the business losses can offset any income of the shareholders on the tax returns, and this can be extremely helpful for startup phase of a new business. Um, we do have a question in the chat. What will be the best if I have two websites drop shipping? Hmm. Um, can you provide more detail about that? Do you have a manufacturing business? Um, let me know more details so I can answer that. And if I can't answer, I can get the question. I can get your answer for you. The advantages of um, the employees of the business can draw salaries as employees, but most people don't, like we discussed, but you can. And um, they can also receive dividends from the corporation as well as distributions that are tax free to the extent of their investment in the corporation. Um, the reasonable characterization of a distribution as salary or dividends can help the owner operator reduce self-employment tax liability while still generating business expense and wages paid deductions for the corporation. So it just goes back to when you pass through, you can decrease your tax liability with a self-employment tax, or any other type of business loss can help with your taxes. Um, so interest in the S corp can be freely transferred without triggering adverse tax consequences. In a partnership or a LLC, the transfer of more than 50% interest can trigger the termination of the entity. The S corp does not need to make the adjustments to properly property basis or comply with complicated accounting rules. So I've never seen that happen, but it can happen. Um, so I guess when you sell your business, you don't have to worry about triggering any type of accounting regulations or any type of IRS government intrusion in your business. So, the advantages for the S corp, it heightens your credibility, and it makes you look better if you run for a loan, that you have a different structure. It just establishes your credibility with potential customers, banking relationships, and vendors and partners. So that's a couple of advantages. Disadvantage is that the formation and ongoing expenses. To operate an S corp, it's necessary to first incorporate the business by filing articles of incorporation, and then obtain a registered agent for your company. This person cannot be you, the owner. It needs to be someone that is not an owner of the company. It can be a business advisor, it can be a friend, but you need to have an agent that is not an owner. And then you have to pay the appropriate fees. There's sometimes just many ongoing fees and annual reporting that is required. And then also there's the franchise tax fees. But I think in the state of Texas, if you don't make over $1 million, you're good about the franchise tax fee. The fees are usually not expensive, but they can be deducted as a cost of doing business, and the expenses that are sole proprietor or general partnership will not incur. Let's see. The presentation, when we tried to put it in presenter mode, it wasn't showing. So I was on slide 5, and then, but it was stuck on slide 2. And so that's why we can't put it in presenter mode. We'll try to figure that out for the next class. Is it a good idea to open a coffee shop with a 501c3 nonprofit organization that's a franchise? I'm not sure that if it's a franchise coffee shop that you can operate as a nonprofit. I would have to think about that. Whatever is in the franchise agreement is what you can do. So if they say that you can operate as a nonprofit, you can. I guess the nonprofit is just mainly for grants and community businesses. So I guess if the coffee shop was helping the community, if you were working in the community for kids to have jobs and for people in the neighborhood to have jobs, that would work. You just have to decide, what is your end goal? Do you want a grant? Do you want to get grants? Because grants typically go to nonprofits. Do you want federal government help with hiring people, like disabled people, or providing like a job program? That may help for being a nonprofit. But why would you just decide? Why would you want to operate as a nonprofit with a coffee shop? Do you want grants? If you don't want a grant, there may be disadvantages for doing a nonprofit. But if you're looking for grants and job training from the funds for job training from the federal government, then that could be an option. Mr. Holmes, we can answer your question in the, we're going to have, for those that register, we'll have like notes and copies of the presentation via email. And then also we're going to have a breakout room. And then I can ask you some more questions about your business. Okay. So yeah, if you want a grant, then yeah, the 501c3 would be the way to go for that. Now, if it's a franchise, just make sure in the franchise agreement that it says that you can do that, that you can be a not-for-profit business. So just read the franchise agreement to make sure that they allow that. But I'm pretty sure if they don't allow it, they'll let you know. Let's see. And then just like before, just the tax obligations and stock ownership restriction. Um, so sometimes in corporations, you have like A stock and B stock. The A stock is for voting, B stock is just for investing or something like that. But though there's only one stock, and so there may be issues of how much money you can raise if that's the route that you decide to go. And also, there cannot be more than 100 shares for foreign ownership, and foreign ownership is prohibited. So just kind of looking to see, ask the a lawyer or have get legal advice. If you want to sell stock for to raise money, then that may not the S corp may not be the way to go. But if it's just going to be you, then that may be the way to go to decrease your tax liability. The next slide, oh, closer IRS scrutiny, and anytime that people are looking, the IRS is looking at you, you have to be on point about your business. And then, you you have to have someone discuss someone about how you characterize your dividends, and then any type of deduction that you use as compensation. Make sure that it's correct. Most people do it correctly. It's I think it's when people try to avoid taxes the most is that when they get in trouble. Um, let's see. That's real accounting work. And then the final advice was discuss the structure options with an attorney. And then once you decide on a legal structure, you will have to register the business or hire an attorney to register the business. So either with the state of Texas. Now, if you have a sole proprietorship, sole proprietorship, or a partnership, you can go to your county and register that, and then we're going to discuss that. Um, and then, but if you have a C corp, LLC, or S corp, then you have to go and register with the state. Um, let's see. I registered my DBA in March of 2020. Um, so with the art design business, if you haven't sold anything yet, that means you probably haven't filed taxes. And let's see, if you purchase supplies this year, then you need to make sure that you put that on your taxes. The IRS gives you up to 3 years to have a loss in the business before they send you a letter and tell you that your business is not a real business, it's just a hobby, and that you should think about either making money or closing your business. I had a friend that received that letter from the IRS, and we kind of laughed at her because she was taking deductions so she could decrease her tax liability. But the IRS will send you a letter that says if you're not making money, I mean, if you're in a business and it's not making money, and you're actually, competing for contracts, buying things, and you just have a loss, that's not a problem. But if you're just like no income and you just have a bunch of losses, then they will send you the letter that says you need to think about it. But for the supplies, make sure you put it on the 2021 tax returns. And then what else should you do? Well, then you should start looking. I guess we can talk about it in detail in the Zoom afterwards. But like, what type of art are you selling, and then how much will it be, and where will you sell this art? Is it are you selling it to individuals? Are you selling it to the schools? Are you selling it to Michaels or a type of Hobby Lobby or a art gallery? Who are you selling it to? So, and you registered your consulting business in 2016 under your name. If it's a just remember that DBAs run out every 10 years. And so you have to re-register your sole proprietorship or your partnership with the county every 10 years. Or somebody could come and take your name. You can keep your bank account, but somebody could come and take your name. So make sure you re-register that. Um, let's see. Thank you for that. So the next one is the nonprofit. And so with the nonprofit, it's tax exempt. And so um, it's for, community organizations, any type of organization with a social cause or advocating for a particular point. Um, you know, most nonprofits run on a small budget. There's some that make a lot of money, but they give out a lot of money too. So just think about. I think the question was about the coffee shop. Just think about turning. If your coffee shop was a nonprofit, then what you know what type of grants or job training funds that you want to get for the government. Why would you do a nonprofit? Make sure you are fitting that criteria. Also, the nonprofit has a different setup on the IRS.gov. And so I've heard that it's a lot easier than in the past. I think almost 20 years ago, it took us about 4 months to set up our nonprofit. But what I've heard is that they have decreased the paperwork, and before COVID, you could get a decision or questions back within 2 weeks to a month. So if you have any questions about that, we went through the IRS.gov website, and then we actually talked to a person. Um, the nonprofit, we did it for like an alumni association, so it worked out for us because we were trying to raise scholarship money. Um, so if you have any questions about that, just let me know about the process, and then how that really works for your business. Because sometimes it doesn't work. Like if you're doing construction business, then the nonprofit doesn't work for that. Um, you just run into a lot of things with that. So we have. Um, oh, these are the types of nonprofits, trade associations, charitable organizations like religious groups, museums, fraternities, sororities, um, political groups, and then I think I'm sorry, I think for the DBA for the nonprofit, you have to file that as a corporation. I don't think you can file a you cannot file a nonprofit as a sole proprietorship. So it has to be a corporation. So you have to go through the state. And then they'll tell you if the state will tell you if anyone has that name. Or you can look on the website and see if anyone has that name. Um, Sorry about this, but this will be in the notes. So this is how you register your business as a corporation, and these are the fees associated with it. And so the fee for nonprofits and receiving certificates of formation. These are all the fees, and then you can. This is on the website, and this is the website to go and find out what's going on. Um, so in the Zoom room, Shaniqua can answer the nonprofit questions that I think that was Miss Walker had. Um, and so we can get to that in the breakout sessions. What else? Oh, and the filing fees can be found at this website, and the state of Texas has a lot of resources and they can answer a lot of questions about corporations and about how to form different, different entities. I'm sorry, I can't make this bigger, but here is um, the fee about the certificate of formation for a Texas entity, $300. What else? Application, well, that's a foreign entity, but it has all the fees that you'll know, so you will not be surprised on how much it costs to form a LLC, a C Corp, or S Corp, or a nonprofit. And so here, if you have a sole proprietorship or a partnership, these are the different locations where you can go and register your business. I just did the 4 counties around us: Collin County, Dallas, Ellis, and Tarrant. So Dallas County used to be in the old Red Courthouse. Currently, it's going through some renovations, but they are still at the Elm Street on the 22nd floor. And so that's where you can go and get your sole proprietorship and your partnership assume names. Now, if you have a partnership, all partners must be there. So if it's 2, both of y'all need to be there. If it's 4 or 5, everybody must be there in person. And then I believe if you use a credit card, this is true. If you use a credit card or a type of debit card, they will charge you a fee. So if your sole proprietorship is $20 to register, they would charge you like a $5 fee. So either have cash or be prepared to pay the credit card fee. They do not take checks. I'm not sure about Collin, Ellis, or Tarrant County, but I do know Dallas does not take checks. So, and then once when you walk in, you would tell them what you want to do. You want to do a sole proprietorship or a partnership, and then you will go into a room to search your business to see if they already have the name. On the next slide, I'll show you how to search the name, and then so you won't even have to go into the room. You can tell them you've already searched for it and it didn't come up. You'll have to search the name, and then you can go back, stand in line, and then you can get your DBA, doing business as, or your assumed name form. And so this is the county website. They redid it. And so what you would do, this is the website that you go to. And then make sure, because when you first get on the website, there is a drop down here. And this, make sure on the drop down that it says assume names, and you input your the name of your company that you want to register with the county of Dallas County, and you search for it. If it comes back with like no name, there's not a name there, then you can go and go to the Dallas County registration building on Elm Street, 22nd floor, and register your business. But like if you use something like the Smith Company, every company that's registered in Dallas County with the Smith name will come up. And so you just need to make sure that the Smith Company is not already registered with Dallas County. The next slide. Once you decide to structure your business, and then the legal structure of your business, and then you have a name, you need an EIN number. And this is the IRS website, and it shows you how to get an employment ID number. So this number is like a business social security number. Sometimes when you go register, let's say you register at the city of Dallas, I don't think you can do that anymore, but back then you could also use your social security number. Make sure you get your employee identification number, because you never want to put your social security number on your business documents unless it's the bank. But like if you're going to do a vendor supply fair or something, always use your EIN number, employer identification number. And so the EIN is free, and you can do it over the phone. You can do it by mail, or you can do it online. And so I suggest that you do it online because it's just a lot easier. You can get an email back within probably within like 30 minutes that says that they are processing it, and they usually can send it out to you within after COVID, I would say a week. You can get that back, and then you can go from there. Um, the next slide just tells you how to apply by fax or mail or online, and then if you have issues, that's the number. And then also, because before you start a business bank account, you need the assumed name certificate or the assumed name certificate for the sole proprietorship or partnership. And if you decide for the LLC, C corp, or S corp, you'll need your articles of incorporation and your certificate of formation. So these are different banks that do not have a fee for their bank accounts. Um, for like, let's say BBVA, you may only go in, I think, to the bank maybe 3 times a month. Go talk to the teller. So if you have, like, say, 5 or 7 checks, either you need to do that direct deposit. They need to pay you directly, transfer the money into your account, or you need to use the mobile banking, or you need to have all checks together with you, and you go in and not go in more than 3 times and talk to the teller. You can always use the bank account that you use for your personal because you have a relationship with them. But sometimes the Bank of Americas and Chase, they charge $25 a month when you do not have let's say $1,000 in the account, or if you don't do so many transactions, then they'll tell you, hey, you owe us a monthly fee of $25 or something like that. Um, BBVA was just bought out by another bank. So I know the bank is an American bank. So right now they are opening accounts. I don't know if they will have any free bank accounts later, but just check with your credit union. If you have a credit union, the credit union may not charge you a fee because you have a relationship. So always check your local credit union and whoever you do business with, because you may be able to negotiate those fees. And this is what you'll need to open a bank account. Um, it is it's just all the information that you have, the assumed name certificate, um, any type of in some counties or whatever, they call it a different name. And then what else? The partnership agreement. Um, they may allow you to open it. Oh, the bank account does not allow you to open it without a partnership agreement. And then your articles of incorporation, certificate of organization, certificate of formation, that comes from the state. And then let's see what else. These are just some small business resources for you. Um, we can go over that another week. Um, do y'all have any questions? I'm sorry, I couldn't see the questions. What is the best group? What's the best legal structure for a family business to fall under? A corporation, a LLC? Um, well, it kind of depends. Will everyone have the same amount of ownership, or is there going to be one owner? How are you going to set it up? If everyone has a limited amount, the LLC may be better. When I say limited amount, ownership, like if someone has 10%, somebody has 15%, somebody has 25%. Um, if it's, if it belongs to everyone, the C corp may be better. But that I would ask that you talk to a lawyer about, because there may be some things that I'm missing that I don't know about the family business. And you may want to get into more detail about the family business and all of the different rules, well, responsibilities that everyone will have, that you can talk to a lawyer for free for the first hour. You have to ask them though. Just don't assume that the consultation will be free. Ask them if they have, this is what you're thinking about, starting a business. You're looking for a lawyer. Can you talk to them for free? They may say 30 minutes to an hour or whatever, but just talk to them about it. While we have like 3 minutes for the breakout session, the Minority Business Development Center helps ethnic minorities, Black, Hispanic, Asian, Native American with business plans, with loans, and with procurement opportunities. So if you won't have let's say the family business is you're selling, I don't know, let's say you're selling some type of educational software, you want to go work at Dallas ISD, the Minority Business Development Center will help you, and the Small Business Development Center number 4 will help you with the different procurement officers, the purchasing agents, because we pretty much all know each other in the small business circle. So we can give you the number of who you need to talk to, or guide you to that path. The IRS, that's the IRS Gov's website, the SBA, the Small Business Agency, they are a wealth of information. And so when you have time, if you just go to the SBA.gov and read about small businesses, it'll give you a lot of information on more legal structure, on how to sell your product, marketing, and it's all there. It's all free. Small business development centers are all over Dallas, Fort Worth, and they can provide you with consultation about your business. There are a bunch of them. I'm not sure if they are charging, and I don't think that they are in session, like doing in-person activities. But here's a list of them that you can contact, and then we'll stop there with the small business satellite offices. There's one in Cedar Hill. There's one at Bill J. Priest Institute, which is off Corinth Street. There's a Garland satellite office in Addison. And then also do know that the Redbird Southwest Center Mall has a entrepreneur center that has helped a lot of people. And it's like a little hub for small businesses. So there are a lot of resources out there. And we are all here to help you grow your business or to start your business. So I guess I will stop sharing right now. And then we have like 1 minute to go to, we have 1 minute to go to the Zoom session. And if there are no more questions, I will see you in the Zoom, in the breakout room. So thank you for coming tonight. And if you have any questions, I'll see you over there. Thank you.